What's up everybody? Tom here with another video. In today's video, we'll be discussing why this chart is probably one of the most important for you to be watching in the stock market right now. We'll also be talking about technical analysis levels for the Nasdaq, the Sp500, Bitcoin, dollar index, Tesla, and more. Everything in the stock market's been looking pretty good, but hyper stocks are definitely getting hurt. What's next for them? Stay tuned. Alright guys, well as we like to do on the channel, let's take a look at what happened in the S&P 500 yesterday to get a better, clearer picture of the markets at this point. Well, we had some movements in, of course, the FANG, and we've been looking very closely here at the FANG over the last couple of weeks. It was clearly the underperformer since pretty much August last year, and it's coming into its own again, led by things like Google, Facebook, etc. Even Apple woke up yesterday with a decent little breakout there. Why is this occurring? Well, I think a lot of it has to do with the fact that Google, YouTube, where we are right now, is a massive beneficiary. They're upping ad costs, and they've just been sleeping for quite some time. I mean, 6 months in the FANG world is an eternity, realistically, when you consider everything else that's gone in the market. So it's become time for tech, or at least big tech, to become popular at this stage. Now, that wasn't happening for the hyper stocks, the hyper tech, things like Tesla, things like TDoc, other ones, Cloudflare, CrowdStrike, it doesn't matter which one you look at, they were all getting hit yesterday, and that's because of where the Russell was. Let's take a look at these indices now and look at the Russell. Horrible performance for the Russell yesterday. Good news though, I believe it's hit a level of support. That's 1.61% down, and the Nasdaq, S&P 500 and Dow just barely scraping out a slight gain over the sessions. If we actually have a look at the sectors, this doesn't really help us at all. Tech was up and the materials was down, and other than that, they were all kind of flat or around the zero-ish point. Is this showing us the true story today? No, actually sectors didn't really show us exactly what's going on with the hyper stocks. Let's get stuck into the technical analysis though first, and we'll go through each different thing that's going on in the markets. Firstly, dollar index. Dollar index, as you know, is a pretty important chart to be looking at for risk on, risk off sentiment. Now, if you're not familiar with what the dollar index is, it's the US dollar index, and it's probably one of the most important metrics that's going on in the markets at any one point. So the dollar index hit the daily 20 moving average here, and it moved a little bit further down. We had some heavier buying pressure at 92. Didn't quite get there, but it's held the daily 20. And at this point, this is where you hope the bulls regain control of the markets. In fact, if the bulls don't regain control of the markets here, and it closes underneath the 20 and continues through 92, this whole bull run in the dollar index recently could be over. I mean, that's the type of signal that many algorithms, many traders will be looking at for further shorts. The longer term aim here is, of course, 94 or even 96 in terms of bullish pressure for the dollar. And if it does get above another high up here and go towards 94, that may rock the markets. I probably think that nothing much will happen unless it gets right through this zone. Let's have a look at another chart that's been moving the markets at the moment, which is BTC. Of course, not the stock market so much, but Bitcoin has been lackluster for the last couple of weeks. In fact, very difficult to trade technically as well after it hit that 60,000 level. Do I still have alerts above 60,000? Hell yeah, I do. It's a good area to be looking at in the future should Bitcoin break through it. We know we've got a higher point over here, but I'm thinking, and a lot of the community is thinking, that the coil up here, if it does break through 60, should be pretty fast and pretty sweet. It should be able to go to the next round number, 65,000, possibly even 70,000 after that point through the cycle. We have a trend line that's in play, and this has been in play now since that last low, and all of it lines up around that 54,000 period. So if Bitcoin cannot get above, let's say, the 57,000, which is our current support resistance zone, and it does continue down, this trend line is something I'll be watching through the next couple of sessions and seeing how Bitcoin interacts with it. So these are all important points: 57,000, 60,000, and of course 54,000 support. One of the best time frames to be looking at Bitcoin and crypto at the moment, 8 hours on your charts. Definitely considered. 4 hour, 8 hour, daily, all very, very good charts to be looking at. Let's move over to gold. So we talked about this one, the sleeping giant awakening potentially yesterday. And look, it needs to get through, as we said, 1760. Once we get through 1760, we've fully fledged, completed the double bottom pattern, and we've started the beginning of the actual idea, which is to move the distance of the double bottom. So once that closes above here, it's going to signal, I think, quite a lot of algorithmic trades, quite a lot of bullish sentiment in the markets. And really, gold's all about this, and so silver. Even though silver's moving a little bit better in terms of percentages, really gold has to drive it, and gold's going to be driving it through the 1760 if it can get there. Previous support is the key here. We've got support, and now that's acting as resistance, and a point that I believe a lot of people, including hedge funds, including big investors, are looking at in the markets. So if gold holds here today, that would be great. It just needs to get through the 1760. I'll reiterate the thought process on oil as well. I know many of you don't care about oil and you're like, Tom, shut up about oil, stop talking about it. Well, it's just a good, interesting pattern. I mean, we've got a fully fledged channel here between the two zones. You'll notice you've got your resistances and you've got your supports. And on top of that, if you go to the daily, a very interesting phenomenon is happening here where the 20 and the 50 exponential moving average are starting to trap price. Look, it buys straight off it, into it, closes through, and sells straight off it up here. Notice how it's kind of like downward trajectory. This is effectively a coil spring in oil right now. Which way does it break? No idea. However, when it does break, it might be worthwhile having on your charts to consider in the future and make your own decisions on. So we mentioned at the start of this video, it's all about this one, the Russell 2000. Why is the Russell 2000 so important? Well, the FANG stocks are moving, they're pushing the Nasdaq, they're pushing the rest of the market, but ultimately you also need hyper stocks and that sentiment to start driving through. And usually these are the ones that come last in bullish movements. You usually see smaller companies driving after the initial recovery. It's what we saw last time, even out of last year. If you go back and you think about what was happening with the smaller stocks, they were driving up and then they just went absolutely bonkers after everyone felt very bullish in the market. So these are the ones that usually in the middle cycle and late cycle perform incredibly well in markets as people look for value. The good news is we're back at a point of support. So you'll notice the resistance that was formed over here. This is now a level of support. And as long as this holds through the sessions, we should be looking good. Let's take a look at it on a 4-hour together to see what's going on. So bad news is it got through the 2 moving averages, which are right here. But again, good news, right on the support. Resistance becomes the area of interest. Let's have a draw of the fib as well on the movement up. So we'll get the fib out here. We'll put a fib retracement on the entire move up here. And you'll notice it's just about to hit that 38.2. And we'll get a fib retracement on the last pull, which is really where you should be drawing it from. And it's within the 38.250 zone, our favorite area to be looking at. So this would like to be holding. I would love to see a bullish engulfing candle formed tomorrow on a 4-hour or a daily. If that happens, oh, that's good. That's a tick. We'd like that quite a lot in the market. So IWM, Russell, have it on your charts. Very important over the next 24 hours. Now the FANG, the great stock market FANG. This is the place that everyone's been at. The big hedgies, the big traders, they've been sitting there going, ha ha ha, we let you sleep on this one and now we're coming through with the goods. And luckily, we've been there the whole way with the FANG. We've been talking about this one for quite some time. Very strong movement up here. I mean, it just even as a percentage of the FANG, you're looking at a 4.2%. And that's still a lot when you're talking about these bigger stocks. Things like Google have overperformed that, which we've been talking about, the breaks. Things like Amazon are on the move. It's all kind of happening. Even Apple yesterday started its breakout. So things are definitely moving still on the FANG. And I still think this is where most of Wall Street are looking at right now. Remember, they rotate through, they have a look at other things. They make people forget about something. We didn't even get asked about Apple for a very long time on the live streams. And then all of a sudden, a little bit of interest the other day. No interest whatsoever in Google. And guess what? One of the best has been Google. So it's all about understanding that when people get bored of something, they forget about it. It becomes the sleeper hit. So has the FANG broken to a new high? Well, we have a little resistance over here. Body close wise, absolutely. This is indisputable. The body close is saying further longs. But we have had 1, 2, 3, 4, 5 bullish days. Usually the FANG can't sustain too much. Over here, it sustained 1, 2, 3, 4, 5 bullish days, and then 1 bearish day. So I think that 1, 2, 3, 4, 5, 6. Yeah, about 6, 5 to 6 is usually the most bullish sustain you can have without having a little pullback. Now that we're at a resistance, I could even see the FANG going 4,800, pulling back a little bit, finding some support on these levels, and then continuing on with our move. And it's going to be the Nasdaq that I'm really looking at from a technical perspective. The Nasdaq looks great on the futures right now, 13,655. It's going towards all-time highs here, and it's really pushing through the 13.6 resistance. That was melting like butter at this stage. Let's take the distance here, extrapolate that out, and it still comes up with the exact same thing we've been talking about, which is the 14.4. This is the longer term target for the NAS from a technical level. Remember, this is the inverse head and shoulders right now that we're looking at in the markets, and things are looking pretty good from the Nasdaq perspective. It's led by the FANG, it's led by the big tech stocks. All things are pointing towards further breakouts and further April momentum. We know that this is a very strong month. Let's now have a look at Tesla. So this is one of the hyper stocks that has been relatively disappointing. I'll just point out here on the daily quickly that we've closed above the daily 20. This was a point of a little bit of dynamic resistance on the way back. So will it now act as dynamic support? You better hope so as Tesla fans, because I want to see this hold. It didn't close above 700. That is very disappointing here on Tesla. It must hold the line where it is right now. I don't want to be seeing more 660s, 650s again. That just shows that the sentiment really isn't there. The increased in competition, or at least the perceived increased competition because of the car side of things, is really starting to hurt Tesla, and you can see the bulls are really not in control. I mean, you had this gap up through the news, through the deliveries. Then you've got red candle, red candle, red candle, small green candle, red candle, red candle. It's mostly been a sea of selling, and this means that the diamond hands are not here for Tesla right now. Even if you're holding, other people are not. 660 remains one of the most important levels for this. Even if the session gets down here, I want to have a lot of buy lines there. Let's hope they are there. And I really want to see Tesla above 700 on a daily close. The best thing that can happen tomorrow is a bullish close for it to at least say, okay, look, that 20 daily is in play. Yes, we respect it on the way down. Let's respect it on the way up as well. Very important day for Tesla and for all hyper stocks. We saw it's the exact same thing as the Russell 2000. That found support. Tesla's found support. Can it buy? That's the next question. Take a quick look at the Sp500. Nothing much has changed here. It's the exact same thought process. We've got the community trend line here, sitting here, guys. We're waiting for it to be hit. It has not been hit, of course, yet. 4,080. Things are looking pretty bullish on this chart. They're almost getting hyper extended away though. So look, if it goes up here and it hasn't, it does it too fast and it hasn't pushed back to the 20, I would be thinking the community trend line is going to be quite in play for at least a pullback back to the 20 exponential moving average. But we'll be covering all of that and more on the channel as always. Please remember, if you've enjoyed this video, to subscribe, hit that like button, come join us 1.5 hours before the market open tonight. It's going to be another great session. I'm interested to see how crypto goes into this New York, London, European kind of mix, because it's been fire between that kind of like 3 hours to 4 hours before the New York opening session. Crypto goes crazy over that period. So come and join us. Let's check it all out together, and we'll see you in another video. Bye for now.